Welcome back, fellow traders, to a new video of Timo trading techniques. In today's video, we will explore a new trading technique with two indicators, the EMA and the VWAP indicator. We will also be testing out the strategy in a live backtest at the end of this video to get an idea about what profits to expect. Without further ado, let's dive into the strategy and see what is it all about. First, we add the indicators for this strategy. We go to TradingView and click Add Indicators. Then we type EMA and add it to our screen. We also type VWAP and add it also to our screen. The VWAP, or Volume Weighted Average Price Indicator, is a trading benchmark that represents the average price a security has traded at throughout the day, based on both volume and price. Next, we go to settings of the EMA and change the color from blue to red. We also change the VWAP setting by unchecking the boxes of the bands. We are now ready and prepared to execute the technique. We will start by taking an example of a long position. To find a good entry position, it is important to keep a few steps in mind. Step 1. Identify the support and resistance zones before we can take a position. We first have to identify the support and resistance zones based on past price action. These are zones where the price reverses or bounces back. In this example, we see such zones depicted by orange boxes. As we can see, these zones act often both as support and resistance throughout time. You can identify these zones by looking for past price highs and price lows happening on certain levels multiple times. By doing this, we have a more than fair chance price will reverse when price approaches these levels in the future. Step 2. Wait for the red line to cross the blue line. Whenever the red line is under the blue line, we wait for a crossover of the blue line by the red line. As soon as this is happening, we can take a long position and place our stop loss under the first lower support zone identified in step 1. This ensures us our price is protected by at least one barrier to the downside. Step 3. Risk management with a risk-reward ratio of 3. It is important that after we took a position, we execute it with good risk management in mind. This means we only take profit with a risk-reward ratio of 3. After we have placed our stop loss, we now set our take profit level 3 times as high from our entry position. This means that the distance from our entry position to our take profit is 3 times longer than the distance from our entry to our stop loss. By doing so, we now can make more losses than gains, as we will see later in this video. In this example, we see this working not only once, but twice we took a favorable entry position, resulting in good profit both times. I also want to mention the optimal time frame for this signal strategy. After many weeks of backtesting this strategy thoroughly, we come to conclude that the 5-minute time frame works best for this strategy. You may be asking yourself if this strategy is profitable over a long period of time. We will see in a moment if and why this strategy really works by doing some live back testing over a longer period of time after we have watched a short example. But first, if you are wondering on which platform is best to do this signal and other strategies on, then I can highly recommend you Bybit, one of the top cryptocurrency exchanges in the world. Bybit is safe, secured, and transparent. Be sure to click on the link below. You could also receive a nice bonus of up to $30,000, so you could try the strategy out for free. In the next example, we will study a short position. The steps are the same as for a long position, but in reverse. First, we identify our support and resistance zones and make sure the red line is now above the blue line. Then we wait for the red line to cross over the blue line in a downwards movement. As soon as this happens, we enter the market in a short position. We put our stop loss above our first resistance zone above the current price and set our profit level with a risk-reward ratio of 3. Again, we experience a nice reward. Now we finally put our technique to the test. I will also fast forward so we can see the results more quickly. The results are truly astonishing. In a period of little over a week, we found 39 trades, and of those, 29 were in profit, 10 were losses. This means we gained 3 times 29 minus 10 or 77 risk units over this period. If we had, for instance, a bankroll of $1,000 and risked $10 every trade, we would have ended up with $770, a very substantial gain of our bankroll. This also means if we were to risk $100 every trade, we could have made $7,700 using this technique in little over a week. And the best part of it all, you could do it too, just by following the steps explained in this video. I want to thank you for tuning in, and I'll see you soon with more profitable and easy techniques. Also, if you like our content and want to see more of these trading strategies from Timo Trading Techniques when they are posted, please click the subscribe button below.